back tested, and we're still using, which has been working efficiently. Okay, we've tried to test these ones and put them together for you to teach you. Now, among all things we are going to teach you, we still cannot use everything. We will teach you as many as we can so that you can, on your own, go back and back test. Back test is trying it out. Back test is enter and exit. Place trade. I don't know how people see back testing, but back testing for me is you have to place trade and see the one that works and the one that does not work. At the end of the day, you will come to a conclusion that this is what I'll be using as my trading strategy. That is for you. Personally, I have my own trading strategy, which when I give some people enter this price, they will tell me, they will ask me, how did you know that market will reverse from there? How did you know that this is a buying point? How did you know that? Based on my personal work and my personal strategy. All of that I'm going to teach you. I'll tell you this is what I'm using. But I use a whole lot of them. Why? Because I understand their techniques. I understand how they work. But you as a beginner, you can decide to use one or two methods so that you will not get confused. Can you decide only one thing, only one strategy can actually give you efficiency in this market if you understand that one strategy. So please, you will need your notes beside you. You will also need the manual I'm going to use for this class. It's very important because, like I said, we filtered so many things and we've tried to compress these things. Now, the manual is not just something we copied from the internet or what. No, this is what we wrote from our own experience. It's precise, it's simple, it's something you will understand. Okay, straight to the point. So we've done all of that. We are also going to teach you practically because we deal with live charts. Everything, if you've been following my class, you'll see each time I don't teach with them. Each time I teach you and I see an entry point, I will enter my trade. And I will tell you, you can enter if you have a live account. Even if you have a demo account, the essence is that you practice it. Please, practice is seen as back test. When you back test, you keep record. Okay, I'm using support and resistance. Out of 10 trades, I use support and resistance. 7 worked out, 6 worked out, 3 worked out, and 7 failed. It depends. After all of those records, you now say, okay, at the end of the day, I am going to use my strategy. My strategy will be either support or resistance. Okay, combined with trend line, combined with a pattern of candlestick. There are over 10 candlesticks we're going to be teaching patterns. Or moving average indicator, could be RSI, could be MACD, any. At the end of the day, decide the one you use for yourself and build on it. And that will form your personal strategy. Okay, at the end of the day, you have something to trade with. You have something to define your entry and your exit.
Good afternoon, everyone. I think there isn't a challenge. What she's talking about is she's talking about support and resistance. Now the question is, are you having issues trading this financial market? Are you having issues trading financial market? Too many persons will tell you they've lost money in Forex. Too many persons will tell you they're having issues. What issue? Now, if you have lost money in the Forex market, the question is why lose money when people are making money? Why would you lose money? You lose money because you actually do not know where to buy and where to sell. Because two things to do in this market. Two things to do in this market is that we buy and we sell. Where do we buy? Where do we sell? These are two questions that need to be answered. If you as a trader have not answered these two questions, that means you will not be profitable in your trade. That is the simple truth. I've just said that is the simple truth. You need to answer these two questions first. Where do I buy and where do I sell? Until you have gotten the answers to these two questions, that is when you are on that track to making a success of the trade. So you definitely when we buy, we will have a slogan, or you have a popular slogan: you buy, you sell high. And where is the low of your chart? Where is the high? These are questions you need to ask, because so many persons will tell you buy somewhere here. If you tell me that if you are on a 5-minute chart and you tell me that
Hello?
Izzy, are you here?
Okay, yes,
Yeah.
I'm back. Sorry, I didn't know it's you. The name I'm saying. Okay, thank you so much. That's my boss. He covered up for me. So challenge. Thank you so much, Mr. Joshua. Okay. So like what he's saying, these two questions or two questions you have to ask class. Okay. So everything boils down to entry and exit. Everything boils down to the popular saying, buy low, sell high. Now the question is, how could you know that? Even if you're buying, how could you know that it's at a price? Because if you watch in the chart, you will always see the ones that are lower than where you're buying, or higher than where you're selling. But then your technical ways of engaging the market would actually define for you if it's low enough for you to buy or if it's high enough for you to sell. So that will take us back to support and resistance. Support and resistance. Just a minute, please. I'm trying to get a slide. Trying to get my slide, please. Okay. This is the slide which comprises of the whole topics we'll be teaching you on your intermediate course. Okay, like I said, we are beginning from support and resistance. like we said, this forms the basis for technical analysis. If we were in my class yesterday, I defined support and resistance as turning points. Okay, if it's happening on the floor, we see it as the base of price. Then if it's happening at the ceiling, we see it as the roof of price, which is seen as the resistance. Then support is the floor. Now, since they are turning points, that means it defines where we should project our price to. When I mean project, that means we expect a reaction when price gets to those initial levels of support and resistances that the price has created. What that means is that answers the question of, if the price gets to this level, what should I do? If the price gets to this junction, Mr. Josh will call them junction. If price gets to this junction, what should I do? Should I buy? Should I sell? If I'm in a buy, should I take my profit? If I'm in a loss, should I take my loss? Now those points, those reversal zones give us the first definition of our entry and exit. Because it's expected that once price reaches those zones, they will react. Two reactions is either a support or that zone is taken out, what we know as broken, or price will bounce back on those zones. Two things, we expect that once price reaches those junctions, which we know as support or resistances, is either price breaks it or price will bounce on those levels. Everything depends on the momentum that price is coming with. Everything depends on the momentum that price is coming with. Okay, you can see on the slide, we said support and resistance is one of the most widely followed technical analysis technique in the financial markets. Simply, it's a simple method to analyze a chart quickly to determine 3 points of interest to a trader. One, the direction of the market, timing and entry in the market, and establishing points to exit the market at either a profit or loss. That's what we're saying. That a price has gotten to a level of support, which we know as our floor base. Two questions will come to your mind. Will this base hold this price to bounce back at that price level? Or is it a level that price will break and continue down? That's the two questions that will enter your mind if price comes to a support. One, because it's at that point, it's expected that there can be a change of direction in the market. That means if price is selling down, it could be making higher highs and higher lows. Okay, depending on the time frame. I love time frame. I love emphasizing on time frame because I told you yesterday that your time frame of interest defines your own support. Someone trading a lower time frame will will identify his or her support on lower time frame, which will be invisible on higher time frames. We'll still come to that. Now, price could be selling
No, no. Sorry, please, if you can hear me, if you can hear me on the chat box, please type 1. If you can hear me on the chat box, type 1. If you can hear me, type 1. Let me know you can hear me. Okay.
We can hear you.
Thank you very much. Okay, so why isn't it's coming to call back? Let me start a brief for her. Okay, so what we're talking about is, as I was saying, we're talking about distance. I said earlier that 2 things you must answer in your journey for a successful trade is that you must answer 2 questions, and that 2 questions is where will I buy and where will I sell. Now, sometimes when I tell some persons, if you look at the particular time frame, you say that is your low. You say that is your low and that is your high. If you look at 5 minutes, you look at the down of your chart, you say, oh, this is my low. The up is your high. I switched to 4 hours. That's your high. You're not seeing anything. Okay, when they start, just hold on. Just hold on. One thing I'm advising everybody is mention it, because it will go a long way to help you.
What is happening in the room? Oh, we don't understand again.
Just hold on. What's the problem? What is the problem? Unmute your mic and say something. What is your issue?
The sound is fake.
Just hold on 1 minute.
Visual.
Those are the 2 things that establishes where a trader should be looking forward for a buy order, or will be looking forward for a sell order, support and resistance. Now, all of these, I am not interested. That's why it's a manual. You can get it and read up, okay, so that we can run and get to chat. A minute, please. So now it says, suppose an area in the chart that has that a drop that price has dropped to but struggled to break below. Price has dropped, that means price is falling from up. Then it gets to a level which we see as a ground level or a floor level, or technically we call it support level. The price gets to that level, it struggles to break below that level. This is what we mean. Price is coming from up, of course, it's always chart is seen from the left to the right. Chart travels from the left to the right. That means price is coming from up. Forget the past. Something must have happened in the past, because this chart, like I always tell people, is period against price. So years back, it could be that price has created significant levels. Okay, but what interests a trader is price, okay, support or resistance compared to the current market price. Support or resistance compared to the current market price. That means you're asking yourself, currently, where is the price? Is it heading towards a support zone, or is it heading towards a resistance zone compared to the current market price? Okay. Now look at this. Price is falling from a high. It got to this level. You might have not identified this as a support initially, but then it came here, unable to break below. It moved up. It came back, unable to break below. It pushed price up. The third time, it still came to that zone, unable to break below. It pushed up. You can see finally it got broken. That's to tell you, initially you would say, okay, this is a low price. This is a low price compared to when price was here. But when it was broken, if you compare this area and this area, you will see that this is lower than this. That is why I emphasize in time frame that your support or resistance is defined by your time frame of interest. Okay, so you can see that this is lower to this compared, and you can see that this is lower to every other support level you will see on this chart. Now, but my interest is that you can see that at where it is, price was able to hit a particular level more than 2 times. So as a trader, you have already identified this level as a support level for price. You can also see from to the right, the next chart I have here. You can see that price had multiple touches on this zone. Price had, this is 1, this is 2, this is 1, this is 2, this is 3, this is 4. This is the 5th touch on this level, which we regard as a support level for price. And you can see there is a price. Notice how the price has a difficult time falling below support of $1.25. That means at this level, 51.25, sorry, at this level, there is a price attached to this level of chart. That means it's seen as where buyers consolidate, where we have buyers buying orders, because it's compared to where price has been before. It's seen as a level that is cheaper to where price was or has been before. So price comes back to that cheaper price, it's buyers will have interest to buy at a low rate or at a low price. And sellers, in the other hand, would not want to sell at that price because it will be too cheap for them to sell. So everybody would rather want to buy at a support region where price is seen as a cheaper or at a cheaper rate. Now, this is support. Like I said, if it's happening below the price, below or at the ground floor, it's seen as a support. The opposite of it is the resistance level, which is happening at the roof of price. Okay, resistance is where you have sellers selling orders or sellers consolidation, because it's seen as the roof of price or the peak of price, where we have sellers orders. Okay, so that is for resistance, which if you come to this chart, you will see it technically before we go to live charts. This is what we mean as a resistance. If you compare this and this, you will see that this is happening at the roof of price, and this is happening at the bottom of price. So within these two range, this is seen as a resistant price or a resistant level, and this is seen as a support level. Remember, I said any of these levels can be taken out, can be broken. Now to the right, you can see this price is coming from below. It gets to this level, it reversed, it came back. Price came to this level the second time, it reversed, it dropped, and all of this happened. It came back to it again. That means it's already a zone of interest, it's already a level of interest for sellers, because it's expected that for price to move from down to this level, it's quite high compared to where it's coming from. So here, it will be expensive for buyers to start buying at this top. It will be expensive for buyers to start buying at this top. So rather, sellers will want to sell at a high price. Sellers will want to sell at a high price. Then if it goes down, of course, we'll be in profit. Now the question is, how do I identify a support level or a resistance level? How do you identify a support level or a resistance level? So we said, one, there must be a minimum of 2 touch on the level. Minimum of 2 touch on the level. For a retail trader to actually ascertain a level to be a support level or a resistance level, there must be a minimum of 2 touch on that level, because you're not the one to define support for price. What defines support for price is volume, money. Okay, if there is not much orders or much money or much volume orders on that zone, you know, definitely to push price up. But because we are retail traders, we don't have the funds to actually push price up. Ours is to follow the technical analysis and define the levels that price has initially reacted to. Okay, price has initially reacted to. That means if price comes back to those zones, 70% of the times or 80% of the times, it will repeat almost that same thing, except on rare occasions where you have maybe some key fundamentals that might cause that support or resistance to be broken. Now, to identify a support or a resistance, there must be minimum 2 touch on that zone. Okay, now how do price touch a zone? You can touch it with either the wick of a candle or the swing of candles or swing or price swing. You could touch it either by the wick of a candle. Wick, you can see this is seen as candle wick. The tiny body of this candle is seen as that candle wick. Then you have the full candle, but this is seen as the conduit. So price can decide to come back to a particular level by the wick. It can just come there, then price will be rejected. In this case, it has, we mark it as a zone. We've already identified that price has returned back to an initial level. Okay, yes, it got rejected, leaving a candle wick there. So in this case, price has retested a zone. You can also have multiples of candles, just like what we have here. You can have multiples of candles coming back to a zone. Okay, that's by candle swing. That means a swing. That means it's more than 1 or 2 or 3 candles carrying children, no, coming back to that zone to retest a particular zone, not just the wick. It can also be seen as the second price or the third price touching that particular level. So we said it should always be more than minimum 2 touch on a price level to identify if it's a support or a resistance. Let's go to live chat. Like I said, if you want this manual, you can request for it. It's very comprehensive so that you can read it all. Okay.
How much, ma?
The manual is 5,000. This is card JPY. Let's see. Okay, now look at this. Is an example of a resistance. This is Chef JPY. Okay, let me shrink it first before. Now look at this. Now on this particular time frame, H4, you can see where price is coming from. It's coming from below.
Please, we can't
remember,
see your screen, ma. We can't see your screen. okay, now this is what we have. This is what we have. Let's go back to. Now, this is what we have. I'm trying to shrink the chart so that we can see from past history. Now, this is on H4. This is on H4. We remembered during our weekend analysis, we said, some person said we gave entry. This is where we gave entry for a buy. Now, the question is, why should we buy here? We gave at 0.83 thousand, which is here. And I always tell people that we give a particular price. A particular price does not mean that price will come to that point and reverse. No. Sometimes it might get very close to it. Now, because we know that support and resistance is a range, it's not just like saying one price, like 1. It's just 1 or 2. If I said 2, price is coming to 2. That means if it comes to 3, we said no, it didn't get to the price. If it comes to 5, we said no, it didn't get to the price. Remember that support or resistance is a range of values, just like what we have here. This is H4, and we can see that we've already gotten, based on this time frame, we've already gotten how many touches? This is 1, the first touch on this zone. This is the second touch on this zone. This is the third touch on this zone. Now, price has started falling from a high. It started falling from a high. There are other levels I would have said, okay, let's buy. You can see even when it fell to this place, it bought for like a day. But because I understand that on my higher time frame, there is a level of interest for me. There is already a level of interest that I would want price to fall back to before I initiate my buy order. So I waited for price. I said, okay, if price comes back to this level of support, I would initiate my buy. Now, how did I identify it as a support? There is already more than 2 touches on that zone based on this H4 time frame, which if you switch to daily time frame and weekly time frame, you will still see those levels. And initially, you can see what price did. Immediately, price came to this level. Now, the question is, at what price should I enter? I could have bought anywhere from here, or anywhere from here, or anywhere from waiting for it to touch that price level. It can still come as low as this. Now, to identify a support is a range. How do we identify that range? You can decide to pick the candlestick that touched on that zone. Now you pick the opening price of that candlestick and the lowest price it got to, and extend it like this particular candle. You can see, even though we have multiple touches on this zone, 1, 2, 3, 4. Now this is the lowest on that zone. If we are judging with this zone, this is the lowest that touched this zone. So I can decide to mark out the opening of this candle, because it's a bullish candle that reversed from here, and the lowest it got to as my support level, or my support interest, or my price interest, anything you want to call it. Now, if you extend this, level backwards, now this is H4. Let me switch to daily. Let me switch to weekly. Okay. I want to show you something.
Let me co-host.
Okay, sir. Come. Hold on. Okay, now on weekly, if I enlarge the chart, you might not see it clearly. But by mere looking at it, even with your mere eyes, you can see that there has been series of touches on this level. You can see one here. You can see when price fell, because this is now seen as, if you compare here to where, to this place, this is seen as a support for all these prices up above this price. But below it, you can see it's seen as a resistance for the prices below. The prices below this mark that I just placed here is seen as a resistance for these prices below, whereas the ones above the price is seen as a support for price. Now, what happened? Because we've had multiple touches on this zone, if you count from here, now this is weekly time frame, 1, 2, 3, 4, 5, 6. Even in this 6th time, we've had, look at this, look at this, look at this. Just happened, because this was 3 weeks ago, because this is weekly time frame. Now, we're saying that price has managed to come back to that level. Now, as a support and resistance trader, we said there is a possibility that price will still bounce back on this level, or at this, once it comes to this level. Now we said, because it's not just a price on a level, on a zone, it's a price range. I said, how can we identify the range? We can use the current market price, which is this. I use this candle, which is the lowest wick that touched that zone. Okay, I use this candle, then I extended it to the wick of the candle. Now I extended it to the lowest price it got to. That means anywhere within this zone is my support level. Anywhere within this zone is my support level. Now, what's the range of this support? Is up to, let's say, 40 pips range. Some support range can go as far as 60 pips, 70 pips, 80 pips range. What it means that when price is falling from the top or from a high and it gets back to this support, it can, it can decide to reverse at the top of this range. It can, there is a price, if you trace it to this other right swing, there is a price. It can decide to sell inside this range. This, my black shade is my range of support for me at this time frame. Okay, now price can decide to fall inside this range. It can decide to come as low as the lowest range of this support based on this candlestick I'm using as the last touch on that zone. Price can decide to fall back inside it, right? There is also a price. That means you can decide to buy anywhere from here. Even if you bought here, you are still buying at your support level. If you bought anywhere inside this range, you are still buying at the support level. If you are patient enough, or you think, oh, price, I want it to touch the wick of this candle here, you can decide to check for the price around here. You can say, okay, I will be buying at this price. Now, what is the price? Use your crosshair and check the price at this level, which you can use as a pending order. That means what you are expecting of that time is that anything the price wants to do, let it do. All you know is that once price touches the lowest range of that level, it will trigger my order and start buying. It will trigger my order. And if the direction of that time is for a buy, market will start buying. But remember, any support can be broken, or any resistance can be broken. And that is what we said, even if you are using a pending order, where should my resistance be? What will serve as my stop loss rather? What will serve as my stop loss? Now you've identified a support. Now you've identified a support, which is your interest to buy. What you are saying is that if that support is finally broken, if that support is finally taken out, let me go back to you. If this support is finally taken out is broken, that means price breaks it through. That means I am no longer interested. That means this region that I use as my gauge or as a lower price has been taken out. Because we understand there are still regions and lower prices below. That means invariably price might be heading down to meet another support. If we were in our meeting on Sunday, we heard Mr. Joshua emphasizing on it. He said, it's only news, in rare occasions, news or high impact news that can make this level to be broken. Why? Because it's a support that is built up, especially on a higher time frame, weekly, daily, H4. You know, you can see that they're all higher time frames. and it's a support that has been built up over the time. So for price to break it, maybe it will require a high impact news for it to be broken, which is why you need your stop loss. Now, saying if this level is broken, that means this support, this price did not hold again as a support region. So it's best you exit the market with that minimum loss, which is why we said buy at a low that will make you take a minimal loss, even when price does not hold on the support. Right? If I've been in my class since on Monday, I've been on this trade. I entered on Monday. Now I had my stop loss below that range, below that support, below that range of support. Now look at what price did. Price came back and sold. Even this is my range of support. It sold inside, but I didn't panic because I already had a stop loss below that range of support. And look at it. Look at what's happened today. The buy started today. Now the question is, okay, I've gotten entry. Where should I exit? I've gotten entry based on my support level. Where should I exit? Which will bring us back to exit point. Now go back to H1. That's why I said your time frame determines your exit point or your entry point. On your lower time frame, which is your H1, you can see this level already marked. This is a resistance level. This is a resistance level based on H1. That means what I'm saying is that since I already got entry from this level and price has gone up, two things is either I decide to break even by locking my profit, or I choose a resistance level of price in the sense that I expect a reaction once price gets anywhere close to this level. It can get to the price zone. Two things, like I said, it can be broken or it can retest that zone and fall. Why? Because we already know that it's a downtrending market, right? That means it can get back to this zone. It can buy back to this level of resistance and move back. Now, which is the reason why we said people use different time frames to ascertain their level of entry and exit. If I was trading, if I'm a H1 trader and I was able to get into this market on this support level, definitely I would take my profits at this resistance level, because on this time frame is an obvious resistance, because price has made a significant turn at this level initially. Price has given us a significant turn at this level initially. And how did I mark it? Look at my first touch on this zone. Look at my second touch on this zone. Now, price is coming back to this zone. Remember, inside this swing, there are also small resistances, which this price has taken out. That means the next target is here, based on this H1 time frame. There is a resistance here. If you also go up, you can see other resistances. But before price will get to this place, before price will move from here and get to this place of resistance, it will first react before it will come to this other level of resistance. This is the first obstacle or the first structure it will meet. That means we are expected to take our profit at the first structure that it will meet before moving above this resistance, right? So this should be a target for profit taking. Remember, you define your entry. The next question is, you define your entry, you define your stop loss by the range of support you are looking at. Now, the next is, where should I take my profits? Where should I take my profit? The next structure of based on that time frame you're seeing, except for reasons you think you should look at higher time frames and allow markets to run. Just like me, I might not be interested in taking profits here. Why? Because on my daily time frame, it's almost an insignificant level for me. On my daily time frame. What that means, this is it. This is the first level we identified on H1. This one. Now, what this means is that this price can come here. This price can come here. Okay, then retrace. Then retrace before it starts going up to meet this other resistance. Now, this is a major resistance for me on higher time frame, on daily time frame. But this is where markets, look at this, look at what happened initially. This market, after all of this trade for days and all of this, look at this market gave me for 2 days, it bought massively to this place. For 2 days, market bought massively to this place. Still from this support, it bought massively to this place. Now from this place, this is where it gave me a significant turn, which I've identified as my resistance. From here, market gave me a significant turn, which I've identified as my resistance. Now, from this level, it started selling. This took me 2 days, but after 2 days, this took me 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. This is the 12th day. For price, that means it took 12 days for price to do the same thing it did in 2 days. Now you can see another impulsive move that has, we've not gotten to candlestick, that has engulfed almost 3 days sell. What does it tell you? It just simply tells you there is much buying orders. There are demand on this zone because it's seen as a cheap rate compared to here, or compared to where price is coming from. So there are much demand orders for buy at this zone, because you can see that once price reaches here, it pushes up. Once price reaches here, it pushes up. Once price reaches here, it pushes up. Again today. Remember, it touched here, it sold inside this zone, which will now use this week as our support. Now I can decide to, because price has moved above my entry, I can decide to break even. In this case, I've broken even. I'm no longer running. I'm risking nothing at this point because I've broken even on my entry. Right? So this is what we are saying. Now, first of all, identify this level of support. Now, 2 ways of using a psychological number still on a support level. So psychological numbers are zeros that are attached to figures, like different ways you can use to define your entry in the market, even though you are seeing price at the support. You can decide to say, okay, at a support level, there are prices anyway. Price can get to a support. Then, because we know there are different prices on that support zone, you can say, okay, let's look for psychological values around that level. Psychological values are just random numbers, like the 10. You can say 10s, 20s, 50s, 100s, like that. That psychological numbers around that zone, that level of support, where price has initially reacted and said, okay, it's just like saying price is at, or Naira is at 55 Naira or $55 or whatever it is. You said, okay, instead of 55, why don't I wait for price to come to 50? Or price is at 50, let's say 527 or 515 or 512. You can say, instead of buying at 512, why not, price is already close to 500. Why not, definitely it should come to 500. Why don't I allow price to come to 500? So I will buy. Now, what just happened is because you want to buy at a round figure, at a round up number. okay, that extra 5 naira or 8 naira or 7 naira on top of 500, you might say, I'm not paying this. Let me allow price to come to 500 so that I can just buy at a random number. Now, this is another way you can trade psychological number around a support region or a resistance region. Now, how do I identify the support number, psychological number? It's just by knowing where price is currently, okay, with current market price compared to that support or resistance region you are interested in. Then you pick your number, just like what happened here. I said 0.83,000. It's just like saying at 83,000, okay, as a psychological number. And now, why did I identify here as my entry point? I already have my interest. I've already identified this zone as a support zone for a buy. Now, the question is, which of these zeros is closest to this support region? It's definitely not 82. 82 is still far below. 81 is still far below. 8 is still far below. But price is already at 83, 200, 83, some figures close to 83. So I can decide to, okay, once price comes to 0.83,000, I would initiate my buy based on a psychological number close to a resistance or a support. So all I need to do is I'll pick my horizontal line. Okay, I'll just like this region. Let's use this region and identify a psychological number. This is our region of interest or a resistance region of interest, right? This is a resistance region. So I can pick my trend line, my horizontal line, and place here. Place anywhere around this region. And right click it. If I right click, it will give me option to know the price at that level. You can see horizontal line properties. I click on horizontal line properties. Then I look at, you can see that this is 0.846005, right? 53. Now already we know that this is the pipette. This is the pipette. So this is like 60 pips above 84,000. 60 pips above 84,000. So I can decide to say, let's see how price reacted around 84,000. Okay, this is, okay, exactly. Now, look at our 84,000 here. Look at, this is 84,000. That means from 83,000 to 84,000 is 100 pips. Just from here, to here, it's 100 piece move. Exactly. 100 piece move of Euro GBP. Now, we can see that initially, price has reacted on that 84,000. Look at, so on daily time frame, it's not very significant, but look at it. There was a reaction of price around this level. There was a reaction of price around this level. Where you will see it, well, it's on lower time frame. You can see this is our 84,000. This is our 84,000. This is our 84,000 around this region. This is our 84,000 around this region. That means if price comes back to this zone, I can use my 84,000 as my take profit. I bought Euro GBP at 83,000. My target is 100. Mute your mic, please. My target is 100 pips from my 83,000. That means if price approaches 84,000, which has initially reacted as a resistance, I will take my price, I will take my profit at 84,000. One is a psychological number around a resistance region or a support region, which we initially marked at on lower time frame. You can see this was where we marked at initially, that we can decide to take our first profit here. Now, two ways. You can also decide if this price pushes above 84,000, you can decide to watch the reactions. Already you've locked your entry. You've locked your entry. You can decide, okay, if price comes to 84,000 and did not give me any rejection of candlestick around this zone, I might take it to the next resistance, which is clearer on our daily time frame, which is here. Which is here, in the sense that here is another level that price gave us a significant turn from the upside. That's why we say support and resistance are significant areas of reversals in the chart. Significant areas of reversals in the chart, which can be broken. If a support is broken, it's expected to be, it will give you a retest. That means what we're saying is, if this level is taken out, if this level is taken out, if price comes here and takes out this level, in this case, we said a resistance has been broken. But would you buy here? No. If you're buying here, that means you're chasing price. If you're buying here, that means you are chasing price. So you have to wait for a retest of a broken resistance. A retest. It could retest exactly at that level. It can come lower. But we know that when price has broken a resistance level or a support level, we can't just pursue price and enter immediately for a buy. That will wait for a retest of price. Then before we can now turn in this initial support, this was our initial resistance. That means we will turn this initial resistance of price. This is a resistance compared to the current market price. But if price has taken out this level, it will turn this initial resistance to a support for a price to move, to continue to the next area of value, which is the next area of resistance for price. So once price has taken out a level, it's expected that there will be a retest of price on that zone before a continuation. Now, this is how prices move in the chart. The first of all is for you to actually identify a region of reversal, a region of major support or resistance based on your time frame of interest. Even if you are using 15 minutes, even if you are using 5 minutes, those your time frames also create levels of interest for you. You identify your support or resistance based on your time frame of interest. Once you've identified that level, you can decide at what price. Psychological numbers can come in tens. It can be 10, 20, 30, 40. It can come in 20s. It can come in 50s. Okay, but all my interest is, instead of me to buy at 53, I would rather buy at 50. Okay, because I know that 50, just like if you go to market and they give you a price of, they tell you, okay, this is sold for 150, or this is sold for, let's say this is sold for 1,000. You can comfortably price that market 950. You can comfortably price that item 500, 900. You can even comfortably price that item 500. But you cannot, it will be unfair for you to price it for 989 naira or 987. Please sell it for me at 900. Where will you get the change? So the same thing with buying institutional orders. Because they know they want to buy lots of units, they would rather buy it at that psychological number. They would rather buy it at that 900 or 950 or 850 or 800 or 500, just those psychological values. So if price, first of all, is that you've identified that zone as your support or resistance. Now, if price has identified that zone, there must be a psychological value that is attached to that support and resistance, which you can now use as an individual to define where you're buying or where you're selling or where you're taking profit or where you're exiting the market at loss, depending on the direction of the market. Okay, so these are how you can actually identify a support and a resistance using the chart by marking out significant areas of reversals. One that has minimum of 2 touches on that zone. The 2 touches can be the wick. You can use the wick of a candle to touch it, like what we have here. You can use the wick of a candle. Okay. This is the wick of a candle, which is being used, which we use as our range to mark out this support level. Now, this tiny body is the wick of the candle that touched this zone. So ordinarily, we identify this level as our support level. So we can decide at the price we want to get our entry. Even though I have given 0.83, 83,000. There are still other prices we have entered. Immediately price touch that support zone. Then also we target our, because you can't just be in the market without knowing where to exit, without knowing where you should take profit, without knowing, because it can't run forever. It can't, market does not run in a straight line. You can't say, oh, because I've known so much, I will allow this market to run for 5 years. No. You will need money for something. The essence is when you trade and make profit, you will place a withdrawal and use it to solve your problems. So if you don't know where you exit the market can give you so much profit and come back and take and collect back the profit. Imagine if you were buying at this low when this happened initially, and you bought, market gave you all of this profit, over 300 pips, over 300 points. Look at it, it still came back. It still came back to that place it started that move. Now, if all of this happened, you bought all of this and market came back and you did not take profit, that means a market that gave you, let's say, $50 or $100 or $200 had taken the same profit it has given you. So that is why you must define at what point should I exit the market, even if I am in profit. It's still support and resistance. That's why we said support and resistance defines both your entry point and your exit point, because we expect that reactions will always occur at those levels. Reactions will always occur at those levels. So if we're able to buy at a support level, that means if price gets to a resistance, you should exit that market first and allow price to decide another direction. It could break that resistance and continue. It could decide to reverse from that resistance and go back to where price started. Okay, just like what is happening here. If this price pushes today and it doesn't give me enough momentum to tell me, okay, it could head here by tomorrow. If it comes here, I can decide to take my profit before today's market closes, because price has approached a minor level. This is a minor support and resistance, a minor resistance, because initially price has reacted at this zone. So anywhere around this zone, I can decide to take my profits, which we notice that 0.84 thousand is within this zone. Even if I don't want to take my profits at 0.84 thousand, I can take it at the touch of this week, which is here, which is at this price, 0.83944. That means that's 94 pips. 94 pips from, instead of 100 pips. That's having 6 pips difference. It has approached that zone. And it mustn't touch that exact price. That is why if you're watching your chart, you already know that if price has approached the zone, then you could decide to take your profit, even when it does not touch that exact price, except you just imputed the take profit or the stop loss and left the market, like close your laptop, you're not watching it. That means if price does not come to that zone, that particular price you imputed, it will not take you out. But if you're watching it and see that price has gone close to your region or your area of value, it's left for you to actually close that trade, because it's expected that from that region, we know that support is not just a line, it's a range of value. So if you mark out that range, anywhere in that range is your support or is your resistance, which you can use to define your entry point or your exit point. So using your horizontal support line, to define your support level is the first way you can identify your support. It's the first way you can identify your support, which is static. Use this to identify that this level is your support region. Now look at where we are marking as our another resistance for price. Now if you trace it back, you can see that here, this level has initially acted as support for this price. Look at it. Look at what price did. When it went up, it came back and passed this level. Then it went up before it got finally broken. Now, do you expect that when price is approaching this region, this was an initial resistance that was broken? Initial support that was broken. That means if price refused to actually break this level, if we see a rejection of price around here, just like what happened initially here, if we see a price rejection around that zone, that means it could be that price is turning this initial support to a resistance price for price to come back. And now what are you seeing? You can see that today's candle has bought into this zone, and you can see it has started rejecting. Price has started rejecting. You can see this week of candle. Look at it. We drew it from the last support that the price broke. And now look at today's candle. It has bought into this zone. And price has started giving us rejection at this zone. Now, I might not want to close this until today's market has closed. This is daily candle. It can be doing everything it's doing today. At the end of the day, I can see price closing above this resistance, this range. I will relax. If at the end of today, I see price close, or it might not even be today, tomorrow, all of this can happen. And tomorrow will start, and I see price push above this resistance, initial resistance level. That means I will relax and know that price will definitely come back to this level that it created before, which I will now use as my target take profit. That means I can be in this market for the end of this week. For the end of today is Tuesday. I have Wednesday, I have Thursday, I have Friday. That means by Tuesday, Wednesday, Thursday, Friday, this market can possibly buy back to this zone. Then I can start to take my profit. Why? Because this has already been identified as an initial resistance, because I had a significant turn at this level. That means if price comes back to this level, there's every possibility that it will also give me some rejection before it will head to this other place. Before it will head to another resistance I'm seeing here, it will have to break this one first. Not until it breaks this one that will target this one. No, until it has taken out this one, obviously. That means price has closed above, be it on daily time frame or weekly time frame or H4. You can see that prices of candlestick might have closed above this. Now, turning this initial resistance, that means we'll be getting something like this, turning this initial resistance to a support. Before a price continuation. But before this will happen, this will first of all happen, which is why we said our next level of support or our next level of resistance is our target take profit, except you have some level of emotional stability that will make you, oh, let me just watch this. If I don't see any rejection, I will lock my entry and allow it. If you understand that techniques, which we talked about, position traders or swing traders, now they can allow all of this market to run and run to this place. But a scalper will not even, can't even do it. Because once a market has touched the next resistance on time frame, on the lower time frame, the person will exit the market. Knowing that before it will target for this, it will first of all break this level. Until it breaks this level, then you cannot target this other level. Until this level is broken, before you cannot target this other level. But there must be a retest of a broken zone. Just like if this breaks, except it uses an impulsive candle to break it, you can break it first, then come back for a retest of this zone, then before a continuation to the next level of resistance. That can happen, or it can move. You just cannot say the impulsive or the momentum in the market. All you know is that if you're able to get your entry, know where you should exit the market based on the next structure of your support or your resistance, depending on the time frame of interest. Depending on your time frame of interest. Now, this is how to actually identify levels of support or resistance. In the manual, is well explained. In the manual, all of this is well explained. So if it's possible, you can get your manual so that you can look at it in the book aspect. You can see what we have here. Then if you use this, you can trace it to the chart and try to identify a level of support based on different time frame of interest. Based on different time frame of interest. If you want to concentrate on daily time frame, you work on identifying support on daily time frame. If you think daily time frame will take you a long time before price will get to support or resistance, if you want to focus on lower time frame, H1, H4, 30 minutes, you use 30 minutes chart to see if you can actually identify levels of significant turn, be it a support or your resistance. All you just need to do is use your mark or your pause on the chart. Use it to mark at that level. Now, when price approaches that level, in our second class or third class, we'll get to candlestick so that you understand some families of candlestick or patterns of candlestick that will give you change of direction, insights on change of direction, rejections. Now, when price, just like what we have here, when price approaches this level of initial level that you already marked out as a support or a resistance, you can decide to, it's a practice, get in for a sell. Why? Because you've identified a pattern of candlestick around that region of interest. You can decide to put in for a sell using a particular lot size, depending on the amount you have in your account. Then watch how it plays out. Just like if we had marked out this level as our resistance, remember that resistance is up to this range. That means if you choose to put a sell anywhere around here, you are using this level, you are using some pips above this wick, above this candle wick as your stop loss. That means if you had put sell here, immediately price sells back to a support region. It's left for you to take profit because it's expected that if this is a ranging market, like in this instance, you can call here a ranging market. Why? Because price has given us multiple touches on two range, unable to break above the support. Yes.
Hello, please, the screen is blank.
The screen is not blank, I'm seeing it. Now you just stopped sharing.
Okay, it's loading now.
Maybe that was your network.
Okay, so if initially price has given us this level as a support and resistance, and you can see multiple touches on that zone. So in this case, you can use this kind of market as a ranging market. As a ranging market. That means even if it's a ranging market or a trending market, it's still expected that you buy and support, which is the floor, the base of price, then sell at resistance. So even if you're trading a ranging market, that is expected that you sell once price approaches a resistance. Then don't forget the place of your stop loss. Then if price falls back to a support, you take your profits. It's left for you to decide, oh, if you want to enter, buy again at the profits. There are just multiple orders you can give. But we're not training you to be putting multiple orders in the market, because the market is full of emotions. If you don't have confidence in market, if you buy and immediately the candle starts selling, you will think that market has invalidated you want to close or panic. So that is why we advise that you build a system, you plant that system. If price that does not get to that zone of interest, allow that market. That is why it's trading, it's not gambling. If it's gambling, once you see a green candle, somebody can see a green candle, this is green. Oh, like this Euro GBP today. That's after the first 2-3 candles. Very impulsive candle, market has already done 50 pips. And someone called me, oh, Euro GBP, should we buy now? How to tell the person? We gave entry point. Our entry point was 0.83,000. That was where we're supposed to buy. Because that was our support level of interest. Now, if price has pushed above that price, then allow it to go. It's just like saying, oh, price is already here. And because it's already green, candle is green, let me start buying. In the sense, you want to start buying here, whereas on that time frame, you've already identified a level of resistance it could be on a lower time frame. Then why trying to buy here? This is not a buying zone based on that time frame. So it's better you allow price. If at all this is you want to buy, then allow it to be taken out first. Let the push continue. Then if you now finally breaks out this level, then allow for a retest of price. Allow price to come back to that level that it broke. Then that means it's now turning this resistance. It's now turning this resistance level to a support for price to push up. Instead of me to buy here, I would rather wait for price to retest back. Which is why we said on that Euro GBP, it has moved. Let it finish today. Anything it wants to do today, let it finish. Then tomorrow we'll know that if it broke that small resistance on H1, if it broke it, okay, let's wait for a retest. If it now gets retested, we can follow it to the next resistance, which we marked out on H4 and our daily time frame. So if a resistance level, if price has approached a resistance level, it's not a buying zone. Instead, allow that price to do whatever it wants to do. Let it break that level. And you will see with your methods, you will see that resistance level has obviously been taken out. Then you can wait for a retest of price, so that price we can now use here as a base, another base. This was the initial base. Then let it turn here to a second base for you to initiate a buy. Because when price is coming back, it's expected that here is cheap compared to where it's pushed before. This could be 50 and this is 100. So allow price to come back to that initial 50 resistance. Then even if it's going back to 100, 150, 200, but at least let it give you a discount from where price got before you continue a buy or a sell order. So these are ways you can actually identify a support or a resistance. Minimum of 2 touch on a zone. Also understand that it's not just a line, rather it is a price range. So know the range you are interested in. When price gets to that range, then it's left for you to decide at what price do you enter. You can enter with a psychological price, a psychological number, a psychological round number, or you can just, some person, when I started trading, I don't know what it means myself. Once price comes to anywhere, I'll just place my buy. What is there? Is it not just go to your MT4, place buy or place sell? I didn't even understand those things because it was very confusing. So that was why we made up this note, so that as you read it, you begin to understand some things and it will become clearer. it will be clearer for you. Then if you, after reading, go back to your chart and try to practice what you read and see how you can actually identify those levels. You can't continue in this course if you've not learned how to identify support and resistance. Support and resistance forms the basis for technical analysis. We'll teach you trend line. Everything still boils down to support and resistance. We'll teach you moving average. Everything still boils down to support and resistance. We'll teach you price actions. Everything boils down to support and resistance. We'll teach you patterns of candlesticks. Candlestick patterns. Everything still boils down to support and resistance. RSI, MACD, every other indicator that we'll be teaching you boils down to support and resistance. That is what we are emphasizing. That is what we are emphasizing on support and resistance. So your first step is to identify those levels. If you're able to identify those levels, then the remaining things will be much easier for you to understand. All of this talks about charts, patterns. Everything boils down to support and resistance. So every other strategy we'll be teaching, this is trend line. Okay, which trend line strategy, which will also teach you. You can see that trend line strategy talks about, now instead of drawing here as your horizontal support, now in this case, because market has identified a trend, when you said a trend, that means market is moving up or is moving down. That means if market is moving up, that means as of that time that it has identified a trend within a period of time, we're not expecting it immediately to come back to this zone. So since we can't use this horizontal line to gauge it or to weight price at this support level, we expect to follow the trend, which is, that's what we teach you, re-entry strategy, how to re-enter the market. If markets are just like we showed Euro GBP, if Euro GBP has moved already and it has chosen to move for a period of 1 month, 2 months, 3 months, will you have to wait for it to come back to the initial support it created? No. Giving you a double bottom? No. That means it's going to be giving you higher highs, higher highs, higher highs, and higher highs. Okay, higher highs, higher low, higher high. So in that case, you can only re-enter that market using a trend line strategy. You can see that in that case, instead of having a static support, you are having a dynamic support. As it goes up, it creates a lower price, then which is retesting a broken resistance to act, that broken resistance will now act as a support for price to push up. In that case, you're going to use a trend line strategy to re-enter the market. That is, if you don't get it from this base. If you do not buy from this base, instead of buying from up, you have to wait for price to come back and create a lower high. Then for you to re-enter the market at this point, or at this point, or at this point. This is a trend line strategy. All of this also boils down to support and resistance. That is why we said support and resistance is the basis for technical analysis. If you talk of moving average, it's still the same thing. Moving average also creates levels of support and resistance. All of these things will be taught on different occasions. They will all be taught on different occasions. Okay, they're all different. We come to candlestick pattern. That is where you even learn everything about candlestick and how to use it to identify support and resistance. All of these are all embedded in this manual. So it will be good you get this manual so you can read it up. Why? Before we come for a class, like for trend line strategy now, before we come for a class, you already know what you're expecting. You already know what you're expecting, so that when we come to class, it won't be all that new. It won't be all that new for you. If we're explaining, you can even write down your questions, so that when we explain, you can ask your questions and it will be clearer. So, but then we've done horizontal support and resistance. If you have any question, you can ask your question. Tomorrow we'll be looking at trend line, which is dynamic support and resistance. Dynamic support and resistance. So go home and practice this. Use your psychological numbers. Try to know price. Psychological numbers will help you to know price at where you're buying and selling, at where you enter your price. Like if at the end of the day, I can just ask someone, what's the price of Euro GBP today? They will tell me price. If they tell me price, I already know that because I know that my entry price was around 0.83 thousand. If it gets to 0.84 or 85,000, I already know that it has made 200 pips or 200 points. I know that I'm in profit. I don't need to look at my chart to know if I'm in profit or not. All I just need to know is where the price. I can ask someone, do you know the price of USD card today? They tell me. Then I'll compare it to my entry point. I'll know if I'm making profit or if I'm no. It's that easy actually. It might not be that simple, but then try to know your entry price. It's very important. Yes, Lambert, go ahead with your question.
Okay, ma. Good afternoon, ma.
Yes, good afternoon.
Okay, a quick one. From what you just taught us on support and resistance, to cap it up, can I say that in the support, one can make this entry if he wants to buy in the support, and the quick what do you call it again? The resistance one can make it buy it, let me say it sell in the resistance level.
Yes. Support level is where you buy. The resistance level is where you sell.
Okay. Now another thing is on the stop loss. Well, now initiating the stop loss for the support should be below the range, which one marks out as the support level.
Exactly. Yes. Yes. Sorry, excuse me. If you've marked out your support level below that range, you can use a price below that range for your stop loss, because you're buying at a low. You are buying at a low, but you are saying if price goes lower than that low, it should take you out of that buy. So that's your stop loss.
Okay.
So you use a number or a figure or a price below where you're buying, but it's not just like 10 pips below or no. Let's give it space, because market will always react. There is no law that says you place your order line to buy. No. Market can start to range for 2 days. Even if it's ranging, as long as it has not taken out that range of your support or range of your resistance, depending on the order you placed, you are still, that support is still intact, just like we marked that here. Well, when I bought, it came down, it came below, it came inside the range. But then it has not taken out the range of my interest. So I slept in knowing that even it's an investment. I slept, I didn't even watch my chart because I have a stop loss. All I know is that if it takes at this level, it will not hold. And all of that happened yesterday. It's not by yesterday. I was still there. So he bought in the morning, but I didn't take profit because it has not given me what to give. I'm not a scalper. He bought about 20 pips yesterday, then sold massive. Entered that range, I left it. And this morning the buy started. And you can see what it has done today. So you use the range of, just like we've marked out here, we've marked out this level for a sell on this time. Just like we've marked out here. Let's assume we want to sell. We want to sell here. If you initiate any sell order within this zone, because this is the resistance now, compared to where price is. That means if you initiate any sell order within this zone, you use a value or a price above this week, above the week of this candle for your stop loss. Then initiate your sell. That sale can give you 20 points. It can give you 50 points. It can give you on. It depends on the momentum before it finally starts going up again. Yeah.
Okay, it's clear now.
All right. Another question. Lawrence.
Hello, ma'am.
Yes. Go ahead. Yes, ma'am. Yes, ma'am. Good afternoon.
Good afternoon, ma'am. Ma, you
Go ahead.
you said something about multiple order. That multiple order, is it take profit 1, take profit 2, take profit 3, as the case may be? Is that what you mean by multiple order? As in you taking your profit in 1, 2, 3? Is that what you mean by multiple order?
No,
Because
multiple order. I didn't remember saying. Go ahead. Go ahead.
because
No.
you said you can take your profit here, and if it goes on, you can take another profit. That's what I'm looking. If it's take profit 1, take profit 2, that's what you mean at multiple order. And you use the word break even.
Okay.
Where can one break even?
Yeah. Okay. Let me start with break even before I come to multiple order. Okay, break even is done by adjusting your stop loss. Initially, when I entered, I'm trying to delay these things. When I initially entered, I risked a percentage of my account, which could be from 50 pips or 100 pips, depending on the range of my stop loss that I want to use. Now, I risked a percentage of my account, which I used, this was my stop loss, which I used below this week. My stop loss was below this week, which is below this support zone, right? Okay. But now price has moved, has already gone above my entry. That means I'm already on profit. So now if this is how much I risked, this is $14. That was what I risked in this market. That means if this market continues and take out this support level, it will take me out and continue selling to take me out with $14. So what I did was, now that price has already moved above my entry point, it has made close to 50 pips. What do I need to do? I had to adjust this my stop loss back to my entry points. I can even adjust it a little. Now, instead of minus $14, 78 cents. That means I've broken even. I'm no longer running the trade on a risk. That means I can allow this market to even do retracement and continue the upward direction. Now, this is break even. For multiple take profit, I can't really do a multiple take profit because this is just one order, except but let me know for them. Now, what I mean by, you can say, okay, if price approaches this level, I will first of all, before I exit, I'll first of all watch the reactions of candlestick. If the candlestick are still very big, like there's still so strong bullish momentum on the candlestick, I will just allow it. I will not close my order. I will allow it. That means obviously it might take at this level and continue to this point. Why? Because there is strong momentum in the candlestick. But if the candlestick is giving me rejection around this zone, I will just close that trade. So actually, because it's just one position, I cannot take multiple, I cannot do multiple take profit because once I close it, I'm out of that trade.
Okay.
Is it clear?
Okay. Yeah.
Yeah, so.
Okay, ma, sorry, a quick one. Just what you just said on this break even. Now, instead of one to break even, can one end the trade immediately instead of breaking even?
Yes, sure. That's why I said if it's a scalper that is in this trade, the person would have taken his profits. Let's go to 15 minutes time frame. If it's a scalper that is in this market, the person would have taken profit long time ago. Why? Because look at this. In fact, immediately price came to this level, the person will take profit because this is a small resistance for that person. This is a small resistance. This is already a resistance for a scalper, like a lower time frame. You can see this is obviously a resistance on lower time frame. But look at what market has done. It has broken this resistance. What this means is that this market can even come back for a retest of this broken structure. Can even come back. Imagine a market that has given you, because you want to be a swing trader, a market that has given you up to $50 or let's say $20. Now coming back, remember this is the essence of breaking even. Now, two things, you can decide to just close the trade here and take your profit, or you said, I have a higher target based on your higher time frame. Now, what do? You just break even, knowing that market can come for a retest. What is it retesting? It has broken this level, which is an initial resistance for this price based on this time frame, but it has taken it out. That means price can come back to this level then before it continues. Now the question is, will your emotions be strong to see that market has given you profit initially, then it's coming back for a retest, then a continuation. Now this coming back, you don't know if it will come back to your entry, or it will just stop at the top of this broken resistance and continue, which is why you need to block your entry. And at the same time, you don't know if it will come here or it will just continue immediately, which is why you don't want to take your profit, because you have a higher target on your larger time frame. Now that resistance is just defined on that lower time frame, which is why if it's a retail, if it's a scalper, the person would have taken his profit based on that structure the person is seeing on that lower time frame. But on my larger time frame, I'm looking at the structure on my larger time frame. But before it will get to that structure on my larger time frame, it will first of all create small resistance and support on my lower time frame. You will first of all encounter small resistances and support on my lower time frame before it will now head to my higher time frame of the major structure. That's what we are saying. So you can decide to close it if you don't want to break even. If market gives you profit, you can decide to close it immediately. But the disadvantage is that if you close it immediately, you'll be forced to enter another one. You'll be forced to look for another entry to enter. So instead of it to be entering multiple positions, I would rather enter one and allow it to move.
Are you saying entering multiple position is bad, or one cannot withstand?
It's not bad. The question is, if you enter multiple positions and you don't have enough money in your account, what if the multiple positions is giving you drawdown? What if, okay, you entered here initially and market made this move, you took profits here. Immediately you took profits here, you said, oh, I've taken profits. Okay, fine. You took profits here, and immediately you took profits here. Market did all of this and continued up, right? And now you came back to that market and said, oh, market that I entered here, now look at where it is. I would have waited. You now say, oh, that means this market is still buying. Then you jump in and entered here. This is a higher price compared to where you entered. Okay, what if at that point you entered here? This is the point of retracement. And this retracement, don't forget, this retracement can even come as low as this place. This you entered there will start giving you minus from here to this level. You don't know, but all you know is that if you had an entry here, even if market starts retracing from this point, you wouldn't panic. Why? Because it's far from your entry. So, but because the emotions involved in the market, you want to enter, exit, take profits, take profit, take profit. Now, if you are doing all of that, at every point you want to trade, and that can make you to be having multiple entries. It's not bad, especially if you have money in your account. But if you don't have enough money, You don't really need those multiple entries. Just enter a trade. When you are satisfied with the direction or with the profits that particular trade has given you, you can decide to exit, then look for another one. Instead of having, remember our calculation yesterday, we said per one trade, what should you risk per one position? So if you have risked that $14 for one position, that is what your account can contain at that point. If you are entering another position, that means you are risking another $14, which is $28. If you are entering another position, you are risking another one. Imagine having 10 running trades. Then how much did you risk in each of them? By that time, you must have risked more than 50 or 60 or 70% of your account size. Whereas we said risk just 3% of your account size per one trade. But I'm sitting there, is it okay? Is it clear?
It's okay. It's clear.
Okay. So any more questions?
Hello. Hello, ma.
Yes.
Okay, so hello, good afternoon. Okay, please, I wanted to understand what if you open, let's say, 3 or 4 positions at a time. Let's say with the account of, let's say, 100 USD or 200 USD. Can you open 3 or 4 positions at a time?
Yes, you can. You can. Now, if you're opening 3 or 4 positions at a time, one, you shouldn't use more than 0.01 for each of these positions. You shouldn't use more than 0.01 for each of these positions. Secondly, you should also know your stop loss, what you are risking by each trade. You can decide to risk to $2, which I don't advise. You can decide to risk, that means $2 means if you're using 0.01 and you are risking to $2, that means your stop loss is 20 points or 20 pips from your entry point. That means the first one you risk 2% of your account size. The second one you risk 2%. Then so you have 8 positions and you risk to $2 in each of the 8 positions. That means you've risked 8% of your account size, which is $8. Because if market goes against you in each of them, what you're risking is to $2. But remember, even if it's just one that you got right in that market, even if it's just one trade that you got very good into, that you had a very good entry, that one trade can give you $20 as against the other ones. That is one aspect of multiple positions. Only one trade can cover up for your 3-4 mistakes or your 2 mistakes. But the question is, will you not close that one that would have given you $20? You can even close the profit at $2 because that's emotion, especially for beginners. It affects everybody. If some persons enter this market with what they visited, why? Because the emotions can't even carry long-term position. So a market that would have given you $20, you can decide to just close it at $5. So that's where emotions comes in. But you can enter, if you have a $200 account, you can enter 2, 3, 4 positions. But it should not be more than 0.01, 0.01. Each of those positions will not be more than 0.01.
Okay, thank you.
You're welcome. Lawrence, yes, ask your question. Your hand is up.
Okay, ma. Thank you, ma. Please, ma, can you do a recap on how you check the pips, how you use that tool you're using to draw to check the number of pips the price has moved between a support and a resistance?
Okay, just like this is cross-sell. If you are using your phone, you see on the top of that chart, you will see this that looks like a cross. So tap on it, use your hand and pick it. You bring it to chart. You You place it depending on your entry points. You can place it wherever it is. Then you drag it. You drag it to where you're expecting price to get to. Let's say you drag it to this place. You drag it to this place. I hope you can see my line. First, you will see, let me put it here. The first number there is 49. 49 is the percentage move from where you dragged it from to where it is right now. You can see it's changing. Let's say this is 50. So 50 is the percentage move from where you dragged it from to where it is now. Okay. The second number there is 1903. 1903 is the number of pips. 3 there is the pipettes. 3 there is the pipette. So what it means that from where you drag that price to where it is 190 points or 190 pips. But if you want to add the 3, you say 1,903 points, because the last one there is the pipette. But I always ignore the pipette, so I will just take it as 190 pips. But for a beginner, I can tell you 190 points. Just take it as points, knowing that it's 190 point move. Okay, so that's the second number there. Slash, the other number there is 0.8473, which is that is the price at that zone. That is the price, which is I can say 0.8472. Okay, 770, because the 3 there is also the pipettes. Yes, 723. The 3 there is also the pipettes. So if the 3 is the pipette, I can say for a psychological number, I can say 0.8470, because the next one there is 2. After 2, you have 1. After 1 is 70. So for me to round it up as psychological number around that region, I can say 0.8470. Knowing that the 3 is pipette, and the difference between 2 and 0 is just 2 point move. So I might not consider that 2. So I can use that as a psychological number also, which is 0.7470. Knowing that the 3 is pipette. So this is what this crochet gives you. The percentage move, the pipette or the point move, then the price at that level.
Okay. All right, thank you.
Yeah. Yeah, so you can measure it both up or down, just to know where you're measuring from to where you are getting to. Then you calculate. You don't even need to calculate, just the prices are already written, so you know the percentage. Any other question?
Okay. Yeah, sorry, ma. I just want to confirm. From this measurement you just did, is that the same measurement we can use for stop loss?
No.
For stop loss is okay, Stephen. Hold on, I'm coming for you. You have to. For stop loss, let me address some questions. Okay. How you determine your stop loss is knowing where you're entered from and where you want to exit if the market goes against you. So if, just like where I entered, the green line is where I entered. This is where I entered. And I'm using this range. Remember, this is my range of support that I had interest in. If I trace it, so I'll multiple touch on this zone. Okay, so I entered even before price got to that support. Those are one of the emotions that happens in the market anyway. So from where I entered to this place, to the lowest of this, is around 45 points, which is 45.99 is the pipette, which is around 46. So, and you can see the price at that level, price there. So, which is 45 points. So since it's 45, I can decide to use, because personally me, when we start teaching you candlesticks and stop run, you understand. Now I don't like putting my price exactly at the wick of that support or resistance. I will just add some points, like 10 points to that price and put it lower than it. So that even price decide to come back to that week, it will not spike me out. So what I do, I can just decide to add 10 more points to this 44 or 45 pips. That means I'll be using 55 pips as my stop loss, which is below this zone. So I can now, since the price here is 0.8285, the 4 there is 50 pence. So I have 0.8280 as the price here. I can decide to use 0.8280. Lower it, below it, it will be 80, 70, 60, 20, 60, 20, 20, 60, 50 is 30, 40 is 40, 30. So my stop loss will be around 0.8220 or thereabouts. That can be my stop loss. That's almost 55 or 50 pips difference from where I entered.
Okay, it's clear now.
Yeah, but you can use your line instead of going through that. You can use your line. You can use this horizontal line. Pick your horizontal line and drop it around where you want to use as your stop loss. If you drop it, it will give you a price there. It will give you a price. This is the price around there. So if this is the price, exactly what I was saying, if this is the price, you can decide to choose a psychological number around there, or you can just use the price around there as your stop loss and impute your stop loss parameter or your take profit parameter. Is that clear?
Yes, ma, it's clear now.
All right, Mr. Stevie, go ahead. Ask your question.
Okay. Please, my questions are three. First of all, I want to understand: is entry point always determined after a break? Is entry point where you put you place your entry point? Is it always determined after a breakout? Okay. Then the second question is: how do we use the FS calculator perfectly to determine your entry? And your risks. And the third one is when do you set the break even? Is it when you are, let's say, 50% in profit or 80% in profit, then you set your break even? Thank you.
Okay, let me start from the second one. Personally, I don't use FS calculator. I don't use it. Personally, I don't use it. Now, for break even, it all depends on just like this Euro GBP today. Someone entered early enough and broke even after market has made 20 points. Now, because we know that markets is just 20 points, it can just come back and take you out. Now, the market came back and took the person out. That means the person is not in all of this move. Because the person broke. Normally, personally, my boss, until the market has made almost 150 points, he will not break it. That means he wants to allow the market to create an impulsive move, create a swing, just like you can't say currently this is H4. Now, this market is about to create an impulsive move. It's about the impulsive move. You don't know where it will get to. You can get to this initial resistance before it will start giving you a retracement. So that impulsive move can be 100 points, can be 150, can be 200. It can be 50. It all depends on your risk appetite. If you feel, oh, market has made 50 points, I don't want it to come back and give me minus, you can decide to break even. But it all depends. Some people will say 50 points, market can still come back and still come back to entry point. I'm not breaking even now until it makes 50 or 100 or 200 points. Everything depends on your risk appetite. Okay, talking about how to define your entry points. You said, is it always after a breakout? No, not always after a breakout. When you enter market after a breakout, is if it is when you are using it to rejoin. That's when we're teaching trend line tomorrow, we'll teach you about that one. When you are using it to rejoin a market, just like what we have here. If this market wants to continue to the upside, that means it might do something like this, then come back for a retest of a broken resistance. Now, you also know that there is a small broken resistance here on the lower time frame. There's a small broken resistance here, which obviously this market has taken out already. So it can come for this retest. That means at that point that it has broken out that level, you don't need to pursue price. You don't need to start entering anywhere around here or say, okay, let me just buy. It has broken. No. Let it finish anything it wants to do. Even if it wants to get to this level, you did not catch it at the bottom. So let it go. Then on the coming back, you can now use something we call a trend line. Now you're saying that it has first created an impulsive move. It has first given you an impulsive leg and got to a level, then it's retracing. Now, if it's retracing back to a trend line, this trend line will form a base of price for you to rejoin the market, which will not define your re-entry into the market. Why? Because you missed the first movement of price. So you are entering at the second touch of this trend line to follow it up. So that's when you can re-enter after a breakout. But in this case, we entered at the base of price. So if you must re-enter after a breakout, it's after which price has taken out a level. Then on the retest of that level, we can now rejoin the trend. Using either a trend line or something else.
Okay. Okay, thank you.
Welcome. Any other question? Okay, if any of you wants to get the manual, please, you can chat any of that me up for the manual. Then if you've not opened your account, please, we've entered strategy. This is strategy class. After this phase, you're expected to start trading. So open your account. If you have money, fund and practice. If you don't have money yet, open your account and use your demo and practice. But please open your account so that we will not teach in vain. I don't like letting know that I'm wasting my effort. It's only when you are practicing that I'm sure that you are doing what we are saying. Okay, so open your account and practice. Get your manual so that you can read ahead of time. You can read ahead of the class. So when we come to class, even just like we've studied this, you can go back and read it up. Okay, even read ahead of us tomorrow. So that when we come, things will be clearer and easier for you to assimilate. So you can add your learning. All of this is just to add your learning. And let's see how we can help as many as possible. So thank you, everyone. We'll see you again tomorrow. Tomorrow we'll be looking at trend line strategy. Okay, Stephen, your hand is still up.
Yes, I wanted to.
Stephen?
Yes, please. I wanted to ask one more question. My question is, you see, when the price got to the bottom line, I can see a bullish engulfing. I can see a bullish engulfing pattern over there. So I wanted to understand that. Are you going to
Yes.
enter the trade after the bullish and the first candlestick that comes after the bullish engulfing? That's what I want to understand. If you are going to enter the trade.
Okay. When we get to candlestick pattern, we'll talk about bullish engulfing. We've not got into candlestick pattern.
Okay.
We'll tell you how to trade candlestick patterns. Yes.
Okay, thank you.
All right. So see you guys tomorrow. Have a nice day.
All right. Thank you very much. Uh,